Hey guys, Mike here. So today was definitely a day of profit taking for the high beta names. About freaking time, by the way. Also, there is a rule coming out. If you think you've seen the Wild Wild West so far, and again, we will talk about open door today because that continued to squeeze, and when it hit a certain price, the trap door went meow, and people went woo. And so again, we'll get into that chart and just how they're doing it and stuff. It's amazing to watch when it does happen. But there's this rule that FINRA came out today they're debating and going to vote on, and if they pass this, oh boy, man, you think zero DT options rule the roost. Just wait. If this rule passes, you're going to bring in, it's going to be a lot more volume coming into the market. We'll also get into Tesla, ARM, also something else to watch out for because, you don't think the market move higher. But if you start to see some rotation in these other stocks, you'll see when I show you this chart, there is still room. Doesn't mean it has to happen now. Excuse me. It can happen after when we start going in November and December, of course. But we need to get through the Mag 7, 8 earnings first. And it's also a couple of the stocks you guys asked about, so I'll go into that. Because there's one stock, it's not even the stock's fault that it keeps dropping. It's just other stocks around it keep dropping in its same sector. And so every time they report, it just goes boom, boom, boom. No news on it at all. It's just that sector in general, okay? So when you look at this right here, I was telling members, this is the Financial Industry Regulatory Authority is looking to rework the pattern day trading rule that limits investors with less than $25,000 in their margin account from borrowing to trade 4 or more times in a 5-day period. In a proposal being prepared for FINRA's board to eventually vote on, retail investors would need to have only $2,000 in their accounts for such trades. And so, buddy, if you thought it was wild before and you thought, the average daily options volume was wild before, it's going to go up even more. Remember, as you'll see with Open Door, they buy those options. They're forcing the market makers to hedge by buying the stock and everything. They're trying to stay neutral. And of course, I'll show you the numbers on these freaking Open Door call options. And this wasn't even the full day, but it's crazy. So if they lower that to 2,000, there's a reason why they're doing that. They're trying to bring more into the market, right? So it's going to bring a lot more people, give them a chance to blow up their accounts by over trading. And so it's going to be fun times. So let me know what you think about that. But if you thought this chart was going straight up before, just wait if they actually lower that from 25,000 to 2,000. Okay, that's going to be nuts. And here's Open Door. Of course, went up 118%. But oh boy, let me tell you, that trip hammer, that $5 mark, oh my goodness, that freaking floor opened up. It dropped 44% in a matter of minutes. It had to get halted multiple times, and it's just like here, boom. Remember the stairs up, elevator down on short squeezes. And when you look at it, we'll go down to a much lower time frame. You can see what I'm talking about and why they had to halt it. And it just dropped like a rock. Then they opened back up, and it gapped back down again, and it halted again. And so again, here comes the pop up. People are like, yeah, we're going to the moon again. Drop back down, okay? Now the big question is going to be, of course, because I am a nice guy, not a mean guy, and wish nothing bad on anybody. I am hoping, for the sake of these people that got in at 450 to 5, to push it up, because every guru on Twitter is like, buy, 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 buy. I'm hoping this thing can push back up and at least give them a chance to exit or at least make some money, because I'm a nice guy like that. I don't know if it's going to happen. Remember, this is a short squeeze. But when you look at this one, oh my, nothing to do with fundamentals, okay? But when you look at Open Door, this was before lunch. Look at the hundreds of thousands in options volume on all these different strikes. And then of course, once it would hit $3, they start buying the 350s, and then they're buying the 4s, then they're buying the 450s. And it just kept rolling and rolling and rolling and rolling. And you can see it right here. We're talking about Open Door, not Tesla, not NVIDIA. Millions in call volume. Nobody's buying puts. Puts were just dead. And then you see it right there. Oh my goodness gracious. And then finally they started buying puts. When we started getting around 5, you started buying some form of puts, but just pushing it up, man. So congratulations if you made money. Congratulations, if you did buy puts on the way down, all that fun stuff. But just be careful. Hopefully for those people who are still in it, it rises back up for them. I always root for the retail investors. So go, push it to 100. You know what I'm saying? But when you look at the new 52-week highs or all-time highs, again, just look at the different sectors. And there's a boatload of them a day, by the way, before we finally got some sell down on this thing. Dollar Tree, really 5 below. Like, okay, even the retailers are getting this thing. Aviation, there's Joby Aviation once again. You go with Toast, UBS, Ulta, Makeup. I had to look, make sure some of these were actually accurate, but they were actually accurate. And of course, we'll talk about what index that's going to benefit the most. But when we look at this chart real quick, it says equity positioning has continued to trend higher. Obviously, the trend is your friend until it's not. And this is the week-to-day average Z-score. Feel free to look all that up if you want to for position indicators. You can see where it's at. Like I'm running a little above 0, and you can just see if they want to continue to move up. There's also another chart showing like CTAs still have room and maybe even be forced to buy more if this thing can try to continue to push up. If all of a sudden earnings, the market starts liking earnings, it starts pushing them up, especially for the Mag 7, Mag 8. So there still is room. Now, does this have to happen now or can it happen later on? Of course it can happen later on. This does not have to happen now, okay? Again, we need to see a market structure shift down to see, and I showed you that 20 moving average and everything else you need to be looking at here. And speaking of the 20 moving average, we talked about it on S&P yesterday. We did not talk about it on the NASDAQ. The NASDAQ now has gone 60 straight days with closing above its 20-day moving average. Okay, and we showed you yesterday, what the S&P has been doing. But the biggest one was in 1999. It was 77 days. And I want you to look at how much more they pushed that thing up before we finally ended up running the dot-com bubble. Okay, because that was in March. So it ran all of 99. And so that's what I'm saying. This market can stay irrational longer than you stay liquid, of course. Now we're, again, running into this. That don't mean now, by the way. We're running into August, September. Okay, so, again, doesn't have to happen now. I showed you August, September. Don't mean it has to go down. It can go sideways. Obviously, August, September are built for pullbacks of 3 to 5%. But then November, October-ish, mid-October-ish, and then November going to December can be super bullish. Obviously, we just went through that last year, but of course that was an election year. But even the year before that, still had good times, and so it doesn't have to happen now. But a lot of this will depend on if Apple catches up, which we're going to talk about. If Google, you saw today catching up. If Amazon starts going right, these are the laggards, okay, which are still heavyweights in this sector or in this S&P, right? But of course, look at the RSP. That's what you got to ask yourself too. Right? It's like bull flagging, but it still hadn't reached an all-time high. And so that's the big question, right? Are we going to sit there and reach an all-time high before we start running into weakness here? Or are they actually going to tease us and say, oh, not yet. We'll wait till the end of the year to try to push this up if we can continue this bullishness, of course, in the market, which is the big case. And that's the thing. I'm not going to try to call a top anyway. Everybody's been calling a top for like weeks and weeks and weeks. You just ride the trend. You can't ride it no more. And again, just start looking for market structure to shift down. If that's the case. When we start seeing weakness, fine. I think everybody will take it, but a lot of it's going to depend on the earnings. You can look at QQW. It already reached an all-time high, okay? Because obviously tech has been, ruling the roost here, as you can see. You look at the Dow, it's had really good returns. But what do you see? You see on the 4-hour, at least, even on the daily, lower highs so far. And so, but it's only 1.9% away from all-time highs. And so, yeah, it's got to break above these lower highs over here, obviously, to do that. But the fact it's even that close really surprises me in a way. I got to be honest with you. That one's the one that surprised me the most because tech has been so heavy into this move up. But again, these are the laggards. We've talked about it for weeks. They've been catching up. Amazon finally breaking out of that range, finally mitigating this weaker fair value gap. I didn't think it was ever going to do it. Finally did it, okay? It doesn't move like Tesla and NVIDIA them, but it takes a sweet little time. So it finally mitigated that right there. Don't be surprised if you get a small pullback. They don't report until next week, of course, with a boatload of the other ones. But again, don't be surprised also, now we've mitigated this, it almost like freeze it up. Do you see how long it stayed within that weekly fair value gap? Almost like freeze it up to continue to move higher. And there is a gap above there, which I'm going to mark out for the heck of it here, just in case we do finally decide we want to move up past that weekly fair value gap. So we got like 234, 236 right there to be filled. Google, laggard, what happened? Looked really good today, up 3%. Okay, didn't even hit the 0.9 fib, hadn't hit the next really target yet as it's moved up. This one will report on Wednesday as we discussed, and so we'll run up in the earnings, okay? Or we're going to get one of these where maybe pre-market or something, we push up, hit that target, pull back, mitigate some of that imbalance right there, and then push higher, okay? And which one's going to happen? That's what we need to find out on this one. But again, laggard, starting to continue to move up. Almost can't really call it a laggard that much anymore, but, Amazon, Google, Tesla, Apple. So if you look at the Mag 7, 4 of the 7 are laggards, right? And you even got Meta showing a little weakness now, right? Then you got Tesla here. it ended up popping up into that finally, that imbalance right there, and then just sold down the rest of the day. But nice move up in there, mitigated most of that. Okay, and again, if you look at the trend, I mean, that's a really nice trend up. And, you know, the thing is, I mean, everybody knows, I mean, I'm not expecting earnings to be good. I don't think anybody really is with Tesla, but again, it doesn't move off fundamentals anyway. And so, not going to surprise me at all if they run this thing up. And then, of course, sales are a dumpster fire. They're pushing back, you know, maybe they push back the robots, all this stuff, and robo-taxis, whatever's happening there. That can happen. I mean, at this point in time, nothing should surprise you about Tesla, right? So, either in pre-market or in the morning, let's see if we come down. What happens when you hit that imbalance below? If we get the bounce right there, all right, because that will kind of keep us in the trend right here, moving up. And then, you know, if that doesn't happen, obviously right above, we can still mitigate the rest of that. We got a good 3% move up to do that. Also to hit that trend line around 339, 340 to the upside. But clearly you can see Tesla, I mean, it loves, when I pick out these targets for you guys, all I'm doing is looking at basically imbalances and levels, things of that nature. And it seems to run to them, right? And then we hit it and then we reject or whatever. And that's kind of how it works for right now. And so there is a gap right here on the 4 hour along with another imbalance. So if we do, you know, show some weakness and NVIDIA starts to pick back up, it's kind of taking a break in the last couple of days. If that starts to pick back up, then not going to be surprised to mitigate all this right down here below. All right. The fact that it, you know, couldn't hold on to the gains today and things like that would not surprise me a bit on this one. And it's had a nice run up. Now, ARM, you know, this little rounding bottom's been pushing it up and pushing it up and pushing it up. So the question is, they do have earnings next week. Is it finally going to be that time for this thing to break into new all-time highs like an ABGO? Okay. Last couple of times they reported, I believe the stock went down, if I'm not mistaken. And so this is something to watch. And because, again, all-time highs isn't that far off. Okay. 188, I believe, is all-time highs. And so, but over the long time, all you've seen is like lower highs when you really pull out on this thing. So if it can break 167.42, then we're in business. But again, they'll report next week. Last couple of times we have come down on this one. And we'll see if they pull like an ASML, right, which has been struggling lately, but nobody expected that earnings for them to like give out weak guidance and stuff, and they got hammered. And so, you know, you're not going to be surprised if ARM does the same way. And I don't know this one nowhere near as well as I do like AMD and NVIDIA and ABGO and stuff like that. But when I see that rounding bottom coming up into a certain level, you have to pay attention. Apple, you know, big pop day again, another laggard, right? It's above that year-to-day all-time high anchor VWAP. What happens? Sells down immediately. And that was it for today on that one. But loves to be squeezing here, getting these breakouts. That was a smaller squeeze, didn't take that long versus the other one. And so we've seen this twice. And I'm telling you right now, they don't report till next week. But, you know, you got to hold around that 211, 212 area. If it can finally close above the all-time high anchor VWAP, then we're in business heading up to that gap. But what I was saying is, when it comes to the freaking earnings call, which you should get next week, and Tim Cook's on that call, as far as I'm concerned, if he says anything else besides AI, they need to escort him and his billions out the building. I mean, it needs to be, I was telling members, Tim Cook, how's your day? AI. How's your family? AI. What are you planning on for the next year for Apple? AI, AI, AI. That's it. You got to make some announcements, man. Okay, whether it's true or not, the market don't even care about that. You just got to start talking AI, AI, AI. That's it. I'm telling you. Like, if they start talking about, oh, I'm going to roll out a new iPhone with a better camera. No. Nope, need to go ahead and put him in handcuffs, take him out the building, never let him back in, okay? And go out and get you a heavy hitter from one of these AI companies that people respect, that actually has a vision for that company. They got way too much money. And that at Apple and all that good stuff and cash equivalents and everything else to be sitting there struggling like that when it comes to AI and be behind. So that's kind of sad. Now, TTD, somebody was asking about this, and members have asked me, and I've covered this, and I did a members video on this. Remember, when a stock goes into the S&P 500, when it's announced, it pops. When it actually goes into the S&P 500, it usually comes down and goes sideways for, you know, just kind of for a couple of days, maybe a week, you know. And that's what's happening in the TED here. It's coming down into this gap right here, broke down past this trend line, started to suck back up once it tested that level. That's what I was telling people. No reason to be chasing way up there at 86. That don't make any sense. Knowing once it goes in, it's going to end up selling down and going sideways. You look at Coin, Tesla, any of them. Okay, I've done multiple videos on this showing the trend for this. Walmart, there's plenty others. You can look at it. It did fill half that gap right there. So that could be maybe the bottom for this one if the market continues to go up, and this one could bounce for sure, no doubt. Obviously, your first target will be 86, and then above that's that huge gap. I can't remember if I put this. I know I did a members video, multiple members videos on this, but so I don't remember if I put this in the public videos to you guys. But obviously, risk reward is good. You can see where my stop loss would be for sure. I'm not about to ride this thing down, but don't be surprised if it fills the whole gap, because now it is in the S&P 500. But this also would account for what other stock? Square or Block. I still call it Square, but it just got put in the S&P 500. It's not in there yet. It got announced, right? So you get the pop. I believe it's going in Wednesday. Correct me in the comments if I'm wrong. And so you could see this thing push up to fill the entire gap tomorrow. Still a gap above right there. And then when they get in there, normally it's going to go sideways or down. That's usually what you see. I mean, look, just go pull a list of the last 5-10 stocks that are major, hitters. They got put in there, and you'll see what I'm talking about. Now, looking up here at UNH, people talk about, it's not UNH the problem, it's all of them. Okay, so ELV, never heard of the company in my life. It's the second largest insurer, by the way, I found out. But they reported earnings, I think it was just the other day. And what happened? The net income during the period dropped by 25%. Oh my goodness. Even though the revenue did grow, but the biggest thing is they're doing what every single one of them are doing. They're lowering or they're pulling guidance because of the Obamacare stuff, because of Medicaid, okay, having slower rates, not being able to figure out what's going to happen here because they have no idea what's going to happen here. And so every time one of these companies reports, who's going to get hit? It's going to be UNH. It's going to get punished. Okay, UNH. All these companies did what before? They got punished when UNH obviously reported. And you can see again all of these. I put this in like Saturday's video, multiple videos now. They're all in this very precarious spot where they're at these levels where, boy, you think the damage is done completely? Maybe not. Okay, these absolutely. If UNH comes out and reports and they pull guidance and say we don't know what the heck's going on and bad stuff, all of these companies are going to continue to drop. That's just the way it is. I mean, that's just reality, right? Because they're all sitting on this cuff of these volume gaps and everything, and these areas where they have support, but if they break that support, boom. And a lot of people are actually looking at these stocks, well, some already have, but like UNH, they're like looking for this thing to break like 2020 levels. Okay, it has not broke 2020 levels. And so there absolutely is more downside to be had on this. And of course, people would just flood in. If it did, there's no doubt about it. And so we'll see, how they're going to report and everything. Obviously, it's been punished a lot. So that would be a crazy drop for the largest insurance already when it's already down as much as it is. But we've seen crazier stuff, okay? Now, earnings to Mars with Lockheed Martin, Coca-Cola, D.R. Horton, GM, RTX right there. And then you go in the afternoon, Intuitive Surgicals, Enphase, Capital One, Texas Instruments, and a few others you can look at. And then, of course, the fund's going to start on Wednesday for us. But and then data, you have Fed Chair Powell speaking. I have no idea what about. And then Richmond Fed Manufacturing Index. And I think even some politician is trying to get Fed Chair Powell prosecuted by the DOJ for lying under oath or something. So it's getting crazy, folks. It just is. So anyway, hope you got some out of it. Please hit that like, subscribe button if you did. Think about signing up with the membership. Left the McDonald's combo at $7.99. Just hit the link down at the bottom. That's everything you get with it. And I'll see you guys for another fun one tomorrow.